Yeah, hi John. Yeah, last week's trades was good. We'll take a look at those shortly. We did very well on last week's trade plans. Those of you that took them, both of those trades hit target. Aussie CAD hit target today. I closed my position on that today, whereas the pound Aussie, that one kind of paid immediately, practically the very next day that went to target. So that was pretty good. Toby, 8%. Is that, 8% this week. Good stuff. Well done. Well done, Toby. Excellent. All right. So I did make a promise last week. And that promise was that today I was going to run through, first of all, and then distribute the links to my FX book link so that you guys can see what we've been doing, because this is in relation to the overwhelming response that we've had so far on requests for copy trading. And we are actually going to start, we're going to put this into action from next week. Okay, so now I'm just going to quickly run through that with you, and then we'll go back to our normal trade planning. So some of you who, or most of you who's been to our website and you've seen this chart here, this chart is taken from the My FX book page, and it shows the record of my trading track record since we joined LCG back in September. Those of you who remember when we moved brokers from 24FX, and each broker we had, I was trying to record a record, and then we moved, and that record got lost, and in the end I made the stand to stay with LCG so that we can build these track records and keep them public. Because if you remember, at the start of the year I made this announcement that we are going to be transparent. You're going to show me yours, I'm going to show you mine, and everything we do is going to be open. Okay, and this is what you should expect. So this is taken, it's on our website under the copy trading page, and I'm just going to show you. First of all, I have it posted on two sites. One is my FX book and the other is FX Junction. So I'm just going to flick through on both of them for you to see. So this is, as you can see, the my FX book page, and you can see here it's the MD Trading account, which is mine, and Sirius618 is my username. I'm going to take the link now and I'm going to post this in the chat, so all of you can now save this link and you can follow my progress. Okay, you can follow my progress. All of my trading that I do gets updated here. So the first thing to note is that the track record is verified. Okay, the track record is verified, and what this means is that my FX book has logged in essentially to the account, okay, and they have checked the trading statements to ensure that they are all authenticated. They have checked them with the broker. You can see here it is LCG. I'm using the same broker as all of you, London Capital Group. Okay? They have checked that the statements, the trade histories, are genuine with the broker. The next thing is the trading privileges have been verified. What this means is that this is not someone else's account that I am trying to palm off as my own. This means that this account belongs to me personally. Hold on a second, guys. Let me just, right, can you see this? Apologies. Okay, so this is what I was trying to show you. All right, so here the track record, it says it's verified. Okay, and trading privileges here is verified. So track record means that the statement is authenticated and they check this with the broker. And then the privilege means that this account does not belong to someone else. And me just saying to you guys, this is my account, but it really belongs to somebody else who's trading well. This means that it's my account. Okay. Now we have the percentage gain, which says that since September, and I'll go down and show you the chart. You'll see that it's the same chart here as what's on the website. If I go back to 2016, that's what you see. Okay, it's the same thing here. It's the same, exact same chart. Okay, so we just took that page from the MyFX book and put it on the website. And if I click on the individual months, you will see the actual currencies traded. And actually, this one, which was for October, which we had a 7.3%, is the actual one on the website. As you can see, the data is exactly the same. Okay, so you can go and look at that. So far for this year, as you can see, the account's up just around about 1.5%. And if I can click on, you can see that I've only taken some Eurodollar trades with that. And I've been quite cautious this week, guys, other than trading the webinar trades, is simply because we've got speeches every single day this week, and I'm just being extra cautious. We have just under 20% growth since September. Okay, on the accounts, 20% growth since September, and you can see we're kind of averaging around about 4% per month so far, and that, you know, will improve over time. Okay, so this information is here for you to see. Now there is some information that is going to be hidden, and there is a reason for that to be hidden, and that is simply because there are some people already that is trying to take what we are doing here at MD Trading for themselves. And if we put all of the account details up here, somebody is trying to reverse engineer our methodology, and we are trying to protect our methods. Okay, so what matters is the track record. You can see down here that we have a profit factor of 1.8, which means that it's a healthy growth. Okay, it's a healthy growth. For every £1 that we lose in the market, we make back almost £2. Okay, so it's a very healthy growth. So this information, you now have the link for it, and you can see how we are performing. Okay, and the next one, this information is also available on FX Junction. And if you go to FX Junction, again, we've uploaded our logo. It's the same username as you see on my FX book. Okay, and again, it's similar details. You can see there's a 19% return on investment. If you click here, actually, let me give you the link as well for this. And it does update a little bit quicker on FX Junction than it does on my FX book. So you have both links. And if you click on here, performance, again, you get the details, and you can see there is quite a clean equity curve with a decent drawdown. Okay, we're not taking big risks, as you can see. There's no real big dents in the negative days, the down days. Okay, there's no big dents. It's moving up nice and smooth and clean. Siska asked a very good question. Should you all have your own profiles too? It's interesting you say that, because we were discussing it today in our team meeting, that you know, we were going to suggest that. It's obviously there's no obligation for you guys to have your own profile on these sites, but I would encourage it. You know, let us be the only education out there that's prepared to show their performance, to show how they are performing. Let us be the only education out there to do this. Okay? And so I would encourage you all to go to my FX book or FX Junction, or both if you want, and upload your profile, and you know, and keep them on online so everyone can see. This is a great idea. We are not going to be the team that just posts screenshots of profitable trades like lots of people do on Facebook. I see lots of educational companies doing that, and trading companies doing that. Takes a screenshot of their phone and posts it as a profitable trade, as proof that they are trading profitable. This is BS. This is not proof. This is proof. Putting the whole account online. This takes every single trade on the account from the time the account was opened and shows the performance of the account. This is proof that what we are doing is profitable, not a screenshot from somebody's telephone, or a screenshot from someone's trading account. If you go on YouTube, you see these guys showing profits, and at the top of their MT4 account is being cut out, so you can't see that if it's a live or a demo account, or they cut out the account part of the platform, and they're only showing you a profitable P&L with a trade open. This is not what we are about. It's not what we're going to be about. We are going to be about showing the evidence, showing our trades. Okay. All right. So just a couple of questions. Paul says, is it just me that trades the MD account? Yes, it is, Paul. It is me, just me, that trades the MD account. And the copy trading account, guys, it will be me that's trading that too. All right, this is my account. Okay. Yeah, Stuart, it's we're going to be one of a kind. This is what we're going to do. Okay. So and what I want, okay, like I said at the beginning of the year, I will never ask you after a really fantastic trading day. Go, all of you guys, go and post your screenshot of the day. I will never ask you to do that. Why? Because that's just euphoria. All that is excitement, and it's, you know, it's emotions. That's nothing. What I will suggest and do myself is let's post what we did for the whole month at the end of the month. Okay, that's what we want to see. How was the month? Was the month a winning month, or was the month a losing month? So let's post this kind of information, not the day-to-day stuff. The day-to-day stuff don't matter. It's irrelevant. We can, you know, in all 4 weeks, we can take, you know, 2 losing weeks, or 2.5 losing weeks, or even 3 losing weeks, and make that money back in the final week and finish the month profitable. All right. Now, if I go and post all those losing days every single day, somebody might say, well, actually, this guy don't know what he's doing. At the same time, I can have 3 winning weeks, and then lose the whole lot in the last week of the month. So I go and post all those winning 3 weeks, and then everyone thinks, oh, he's doing brilliantly, and then at the last week, I go all the way back down to break even. Well, actually, then it's not so good. Okay. Absolutely, Nick. Nick says it's better to show 30 trades over 6 months rather than 60 trades in 4 weeks. And you're absolutely right. So Ryan says, Mike, what's your yearly target? So yearly target, I'm looking for approximately 40%. If we can do 40% in the year, this would be absolutely amazing. Okay. Luke says, admire your honesty and Matt's honesty. Let the stats do the talking. Absolutely, that's what we're trying to do. Here, one question, do you set monthly target in terms of percentages? Yes, and you should all do this. You should set yearly targets, set monthly targets, set weekly targets, and set daily targets. Okay, all of us should do this, especially when we're starting out. This gives us realistic expectations. You know, it's no good us, you know, trying to get 100% in a month. Okay. Yes, Jude, this webinar is recorded and it will be made available for you guys to watch over tomorrow. Okay. Is 40% achievable? Linda says absolutely. If we, you know, manage our risk, you know, and don't overexpose ourselves, make sure we take the opportunities and not keep missing good opportunities. Absolutely. For someone who's a full-time trader like myself, yes. Yes. You know, if you have a full-time job and you can't commit much to trading, then it's going to be a challenge, you know. But saying that, you know, we had someone, you know, do like 30% yesterday, you know, in a couple of days, you know, 30% he did, you know, and he did that with a very low risk, you know. So I'm not going to say to you it's not possible. It's subject to, you know, the market activity, you being able to turn up, take the opportunity, you know, have the nerve to hold the position, you know, as well, and not get out too soon and so on. It's still possible. It's still possible, you know. I never want to say it's never possible, but I like to go from an angle of, you know, managing risk through position sizing and so on, to be able to achieve my expectations. Okay, so I promised that I was going to show you this, and I have done that. And we will now look at the trades from last week. So Luke's asking me a question about someone else who is regularly posting 5% a week. So okay, the thing is there, Luke, is are they saying that they're posting 5% a week, or are they showing you that they are making 5% a week? Because anyone can say anything. Anyone can post, you know, big profitable returns on a screenshot, but are they showing you what I'm showing you, first of all? And if they're not, ask for it. Okay, you're all in your right to ask for it, so ask for it. All right. Okay, so let's now review our trades from last week. We had a great planning session last week where we looked at the markets. and I'll show you what we planned. So this was the Aussie CAD trade, okay, and you can see this is we had a buy stop entry at 98.45, which was here where I took the trade myself, okay, and we had a target of 98.90, and our stop loss was going to be below the 98.37 significant level. This is the 98.37 significant level, so our stop needed to be below here. So from this entry over here, I chose to place my stop at this swing low down here because the significant level is volatile. Okay, it would be because this is where the battle between the buyers and sellers occur. Why? Because it's a significant level. It's a level that's going to be tested as support and resistance, and you can see that that's exactly what happened. If you look at this price action, it's being resistance, it's being support, it's being support, it's being support again. So we had this volatility. So I used the swing low below the significant level where it broke to place my stop loss and allow for this volatility to occur. So as you can see, I stayed in the trade for the whole week, okay, and today it's hit my target. All right, it hit my target today, and all I basically did when it broke above the 98.96 and it was moving up like this, I then moved my stop to the target price, to the 98.90. This meant that I was guaranteed, no matter what happened, my target price. So it so happened that there was some news that came out which brought the prices back down, but then you know, we had a huge rally, and look at this. I got what I was looking out of the trade, but I left almost 100 pips still on the table, you know. So there's something there too. Our next trade was the pound Aussie. And this one was a beaut. This one ended last week, so you could see we had, this was our setup, and there was two opportunities to get this trade. There was one today. Okay, so we said sell stop entry below 163.40. Okay, so we had the entry and we said the stop loss must be at the swing high above 163.51. Why? Because the 163.51 was our significant level. Here it is. This is our significant level. Okay, so we said once we break this 40 level, we need our stop to be at the swing high above 163.51. So that could have been any one of these entries, any one of them, any swing high. If you took this one, that swing high. If you took this one, that swing high. If you took this break, this swing high. Any one of them you choose would have paid. We had a target of 162.64 and it delivered. Okay, that's just above a significant level. It went beyond. Okay, so then today we had another break. Okay, and this was the entry here. The stop is above this level here. Again, it comes down and it hits target. Okay. No, Alice, this one, this trade is not in the My FX book one because it was taken on this account. Okay, which you saw the Aussie CAD history on because it goes after a week. The Aussie CAD closed today. Okay, so we have, just so you all know, we have multiple accounts that we're trading here. Some are using different strategies, okay? And I'm doing that so that we keep all the history clear. So this is what else you're going to see appearing on the My FX Book account. We are going to create, so this week we started the signal service, which we are going to be sending out trade signals. Now, the trade signals that we send out, they are not just going to be any trade signals. They're going to be trade signals that have the explanation of the signals why we are sending them. And not only that, every single trade signal that we send to you, we are going to take those trade signals live. And that account is going to be set up on the My FX Book website as the MD trade signals. So anyone who's taking those signals will basically be able to cross-reference that with the My FX Book page that's showing the signals that we are sending. So again, you will be able to see whether or not our signals are profitable or not, rather than someone saying, you know, you should be making profits on your signals, and when you actually look at your account, you're not. We would have the evidence posted there. So every single trade on that account will only be signals only. Okay. I'm going to do this also for the webinar trades. So you will have the whole history of the webinar trades on a different account on My FX Book as webinar trades. So everything is going to be, I'm going to break it all up and post everything online for everybody to see. Total exposure, nothing hidden. Okay? So sometimes you're going to see some trades that I've taken on one account and not on another, and this is the reason why, because we're keeping the history separate and clean for each individual account. Okay? And this is what you should expect from your educator. If your educator cannot demonstrate that they themselves are profitable, then they have no business educating you. It's as simple as that. Okay? Yeah, absolutely, Paul. No other educator does that because, you know, they don't trade live. Okay? Because they don't make money from their education. Okay? They don't do it, and that's why they don't want to show you this stuff. All right? And I'm going to announce something in the next couple of weeks that is going to be incredible. I'm going to ask for your participation in this as well. And it's an idea that I came up with over the weekend, and I'm going to run it by you all first. But I think it's going to be an amazing thing for us to do. So if you give me a few weeks, and I'm going to disclose it to you. Okay. So I don't mean to leave you on a cliffhanger here, but it's going to be amazing. All right, it really is going to be amazing. So that's our trades from last week. Okay, we had two attempts at the pound Aussie and one attempt at the Aussie CAD, which worked nicely. And also, if you remember, last week I showed you I was short the pound dollar. I've been short the pound dollar for a month, and despite that big move that you saw, 400 pip move that market came back against me, I want to show you that I am still short the pound dollar. Okay, I'm still short the pound dollar. This is where I went short. My stop was over here last week. It came all the way down here, right? And then we had Theresa May's comments that brought it all the way back up here. And today we're heading back down again. I'm still maintaining my short. And this is a swing trade. This is a long-term trade. And I'm doing this to show you each week. I'm giving you this live visual of what kind of psychology is required to be a long-term trader. You have to be prepared to have this profit. Okay, this is nearly 400 pips in profit when it was down here at its low, and then for it to come all the way back, give back that 400 pips of profit, for it to come back down again, you have to be prepared to give it all back to make more. Okay, this is a different psychology. All right, and I can teach you this psychology. Okay, and this is the real meaning of set and forget. Okay, so those who have full-time jobs that don't have the time to be at the markets every day, this is your style of trading. You can have these kind of styles of trades, and you know, one trade a week, you know, can pay you, you know, or even one trade a month can pay you 400, 500, 600 pips. Okay, so I'm going to keep this trade on, and you know, I still have a fairly low risk on the trade, and next week we will see where we are with this trade. But I'm keeping this trade open for you guys. All right, when I took this trade last month, I kept it open for you guys, and every week we've been coming in, I've been showing you this another style of trading. Why? Because we have developed a training course as extended learning for you guys, which we will be delivering for you as well. Okay, so stay tuned and we'll give you more details of this. All right. Okay, so let's move on now to this week's trade planning, because I've used up a lot of your time already, for which I apologize. So first of all, fundamentals. Yeah, Paul, I am bearish on the pound. There's no other position to be on the pound. You know, don't be fooled by what Theresa May said yesterday. All she was doing was telling us her wish list. You know, and I never read it any more than that. You know, the market was thinking this was really positive and it's wonderful and everything's going to be great. This was her wish list. Okay, so so I'm not being fooled by anything that she said. All right, so what have you guys got for me for this week as far as fundamentals? There's a lot of stuff going out this week. There's speeches every single day. So what have you picked up so far? And I'll do a quick roundup of what I've got. Type in the chat, tell me. And this is all part of your education. All the guys that's new, this is part of your education. This is like your test. Every week I'm going to be requesting this information from you. So what you need to start doing is listening to some of the fundamental data that's out there. We've got channels which you can use. I'll type them in the chat. So CNBC.com. They also have a Sky channel and a Virgin channel. Bloomberg.com. Okay, they also have a Sky channel and they're on Virgin, and they're also online. They have a TV channel streamed online. Okay, Live Squawk. Follow them on Twitter. Those of you that don't have a Twitter account, create one and follow Live Squawk on Twitter. They'll give you, you know, up-to-the-minute news and so on. Okay, and then the central bank websites. So the ECB, the Bank of England.com, all of the central banks, the Federal Reserve websites, the Wall Street Journal. It's like £1 a month or whatever it is. Sign up to the Wall Street Journal, subscribe to them, and you have a wealth of fundamental data that's going to be coming to you. All right, and this will give you all of this data that we are coming with every single week that affects the market that we need to know about. All right, so that's my little rant over for all the new guys. So what have we got? Trump in power on Friday from James. Yeah, the inauguration day is on Friday. The markets is also waiting for this. What else we got? A few of you saying that. Nick's asking, has one of the speeches been cancelled this week? I am not sure. I'll just ask Matt to have a quick look. Matt Jones is going to have a quick look for me. Salo, you don't like Bloomberg. Yeah, I know. Look, some of these channels you're going to find that they do talk, you know, and talk and talk and talk. But in between, there's some good nuggets. So if you have it on as background rather than sitting there watching, you know, you can pick up some good stuff. Paul says Governor Polos was hinting at cutting rates. Yeah, I think he didn't in the end. He left rates unchanged at 0.5%. And I think that's what saw, if you look at, for example, the dollar, which has been taking a bit of a beating, really rallied against the Canadian today. Look at this, a disappointment in the fact that they left rates unchanged. Huge day. The dollar, the CAD lost a lot today. All of its gains. What else we got? Yeah, the speech from Theresa May, again, a few of you alluding to. And of course, the Fed chair, Janet Yellen, is speaking, well, she's speaking now, I believe, isn't she? And she's going to be speaking on Friday as well, I believe. Okay. Shreya says, Deutsche Bank refuses to rule out capital hike. What else have we got? All right, let me do my quick roundup as well, and then we'll look at some potential trade opportunities. All right, and this is why we do this fundamentals, because it sets our precedents to what kind of trades we can look at. That's going to have some fundamental drive behind it. You know, and then it puts us in a position to take trades like what we did last week, and 2 trades planned, both of them come in. That's exactly what we want. All right, so it's about the work that we do beforehand that prepares us to be able to plan these trades to get the kind of results we are looking for. And if they don't go against us, remember, number 1 is always risk management. That's at the height of everything that we do. So the US dollar fell to its lowest low for a month after Donald Trump said that the US dollar is too strong and that he prefers a weaker dollar. He also dismissed a tax proposal that would support the dollar strength, citing that it was too complicated. In his comments referring to the current strength of the US dollar, he broke traditions. There's a bipartisan tradition that presidents that come in do not comment on the dollar. This is usually a decision that's left to the Treasury. Okay, and he has spoken about this, and it's left the market concerned about what he may do once he's sworn in. So of course, this saw a fall in the US dollar by 1.3% against a basket of currencies. Also, it lost all of its, or half of its post-election rally that we saw, and prior to that, it hit a 14-year high. So, you know, the dollar was really, really strong, supporting the US economy. Since Trump's comments, the S&P has fallen by 2.3%. and gold is up by 1.4%, highlighting the anxiety that's been felt by the investors. People are looking at other options. The euro, that's been fairly neutral as the traders wait for, in anticipation, for the ECB meeting, which is tomorrow. Tomorrow we have the ECB meeting. This is potentially grounds for strong volatility, guys, tomorrow. So you can expect the markets to be at least volatile tomorrow. So we have to proceed with precaution, okay, when we look at the trades. And also Trump's inauguration as well, which is coming on Friday, as we earlier said. There was still some good news for the Eurozone. According to Eurostats, the European trade balance improved. At the end of 2016, the Euro area recorded 25.9 billion euro surplus against an expected 24.3 billion euro. And the previous year, it was 22.9 billion euros. Also, European exports were also up by 6% to 184.2 billion euros. So tomorrow's statements coming from the ECB is going to be quite important, with the euro starting to look like it might be in a little bit of a better shape. It's interesting to see if there will be any adjustments in the monetary policies. The British pound made a significant move yesterday against most of the currencies, as Prime Minister Theresa May stated that Britain will opt for a hard Brexit. The pound moved more than 400 pips against the dollar, and it made significant moves against the other currencies too. Theresa May's comment, coupled with Governor Mark Carney, who also spoke positive about the UK economy, saw a positive move in the markets. But still, we've only heard one side of the story. Some of the European officials decided to take to Twitter and voice their opinion, saying that Britain are trying to get their cake and eat it, and advise that this will not be the case. The move is not so much about positive towards the UK and the UK economy, but it's more of an uncertainty as traders are pulling out of the UK, lifting their shorts on the pound, reducing their long exposures on the US dollar, and they are opting to safe haven currencies such as the Japanese yen, the Swiss franc, and gold have all seen significant rises in the last few days. The Japanese yen, again, just on the back of what we've just said, has continued its rally. Even though there was some positive macroeconomic data hitting the wire about Japan, this is had little effect, as really the yen rally is all about the fears over Brexit. This has caused safe haven currencies to fall back into favor, even despite the premium that has to be paid on the safe haven currencies. And we've seen a bearish move by the Canadian, as the Bank of Canada chose to keep its interest rates unchanged at 0.5%. And what's also putting pressure on the Canadian is the fact that most of the other currencies are also performing well. So that's my roundup. This is my research on what I found out this week based on what we have discussed. What are the currencies likely to give us a move for the next few days or week? What are the currencies we can look at to plan? Type in the chat. I'll make a note of them and we'll look at those charts and see if there are any opportunities on these charts. You guys can hear me, right? I haven't been talking to myself for the last 10 minutes, have I? Usually the screen is scrolling up with currencies. I hope I haven't put you all to sleep. All right, so we've got some coming through. Dollar CAD, pound yen, dollar yen also. You want to look at gold, Gerben? We may be able to look at gold. Pound dollar. Euro pound. That was making a few moves the last few days or so on that. We'll have a look at what the charts look like. A few of you on pound, yen and gold. That's all right. For all the new guys, that's fine. You don't have to make a suggestion. You're going to see how we put it together as well. Okay. FTSE 100, Swiss yen. All right. Let's take a look at those ones that we've got from you guys so far. All right, and see if there are any opportunities. The dollar CAD, which was one, which is the chart that we are on. Okay, and this is going to be fairly easy to look at. So the first thing to make note of is, and you will always see this with the markets when you're looking at charts, look at today for the dollar CAD. Is there anything unusual about this day if you compare it to all of the other days you see here on the chart? Is there anything that's unusual about this bar compared to all the other bars you see on the chart? Good. It's a very strong bar, strong impulse move. This bar is a lot bigger than most of the bars. If you look at the average, this bar is way above the average. It's a very big move. Okay, so what that means is when you see a day like this, okay, what it usually means is the following day we're likely to have some indecision. So we're likely to have something like this. The next day we can probably expect the market to do something like this. And the way that it does it, it's not smooth. It doesn't just come out and come down. It's going to be a little bit choppy. Okay. So for us planning a trade, when you see a bar like this, it does look like it wants to continue, but chances are we're going to get some of this kind of thing. The evidence to see that is if we go to the pound dollar chart, and you'll see exactly that. Look. Again, big day. You can see that this day is much bigger than all of the other days that you can see on the chart, except when we had the Brexit vote for obvious reasons. But, you know, the next day you get that kind of thing occur. And it's not, you know, easy. It's going to, you know, it's going to be a little bit on the choppy side. Okay, so what that means for us is that the dollar CAD, as nice as it may initially look, it may be one to give a little bit of room before resuming trading this particular pair. Okay, because it's probably going to mess us around a bit. Okay, we need to give that some room. There was a lot of buy-in in the dollar CAD. there was some shorts here that would have been stopped out on that move. Okay, so we need to just step away from it a little bit and give it some room. So I'm going to mark an X across the dollar CAD. I've written down all the currencies that you guys suggested, and so the dollar CAD is not going to be any good for us. So let's have a look at your next one, which was the pound yen. Okay, so this is the pound yen, and you can see what's happened in the pound yen. We had a gap down when the markets opened on Sunday night, and it's just come back and closed the gap yesterday. We're getting a bit of a continuation. Now, in order to decide whether this is likely to keep pushing higher, okay, or is this gonna roll over, what we need to do, because you can see it's been kind of downward trending from here, but we need to go up to the higher time frames to see what's the real picture in the pound yen. Okay, so let's go and take a look at it on a weekly, which will just keep our lines there. And as you can see, on the weekly time frame, we're getting this kind of reversal. Okay, now this would be nice to see if this was you know, a Friday, because what it means is, you know, on Monday we could really look to expect a bit of a rally in the pound yen. There's nothing to say that it might still do that now, you know, because you can see that it's quite a bit of a reversal. So, you know, the pound is certainly much stronger than the yen at the moment. Okay, and if we go up to the monthly time frame, on the monthly time frame, it's just lifting off of the lows. It's still pretty bearish, okay, which does suggest that it will probably end up rolling back down again. Okay, this time frame puts the whole thing in perspective. Okay, that's the drop. Okay, and this move in the pound that you see going up here in the last few months is nothing really than a profit-taking rally, and it's expected to come back down, at least to test the lows. Okay, so this is just a little bit of a rally, but it should eventually roll back down again. And why we do this, why we go up these time frames and look, is to keep our perspectives correct. Because as you can see on the weekly time frame, it's very, very easy to get carried away with what you see. You know, one might think, oh look, we have a, you know, the snapback here, the prices are snapping back, and this is something that's going to go and go and go and go. And that's not the case. The monthly does not say that. Okay, so it means we may get a small bit of a move, but it should eventually roll over. So going back to the daily time frame, and this is how we work them out so that we know roughly where we can go with this. Okay, so potentially we could see a move above the next significant level, which is the 140.46. All right, and if we get there, we're probably going to be looking at maybe, you know, a couple of hundred pips move to our next support area, which currently will be doing the job as resistance. So we need to have a look inside now, go with our microscope, go to a smaller time frame and see if there is a setup towards this significant level. And we do this, we just break it down. So this is nice to see. Okay, this is nice to see. So again, and this is the pattern. Okay, here you have order accumulation, and then the gap open the orders are triggered. So you have this big gap open. It comes down, but then it gets back into order accumulation and it goes back, it fills the gap. You know, and again, these are stop orders from those who were expecting this to continue to come down. It doesn't, it goes back up again. Then it finds support where it previously found support on our significant level, the 139.43, and it holds there right throughout the day, and now you're seeing it make this move. The chances are now, cheers Greg, that it's going to go up to the 140.46 area here, and it may do this. Look at what we can expect at the 140.46. When it gets back to it, it hits resistance. It's met by overwhelming selling pressure and it comes back down. Then it gets back there again. The same price point is met with overwhelming selling pressure. Okay? So what this means is that those selling pressure means that those that are selling from those levels have to protect themselves. So we can accept that above the 140.46 area, there should be an amount of buy stop orders from those shorts from those levels, because you can see the setup on the chart. We are on our way to test that. So one or two things is going to happen at the 140.46 area. It's either going to be met with more overwhelming selling pressure and sell back off again, which would be a very low risk trade for a limit order. Despite the fundamentals in the market at the moment, there's also a good chance that if it gets above the 140.46 and there is still buying momentum, it's going to trigger the buy stop orders that sat above the 140.46 to give us that move all the way to the 142 area. Okay. The only issue I have right now is that, okay, we can still do this, but we're going to have to put a little bit of a condition on it. So the time is 9 o'clock right now, and I know we should be finishing. We're going to finish soon, I promise. But I don't want us to take this if it gets above there now. Okay, it's the wrong kind of time. And the chances are, if you look at this momentum down here, this is what we can expect if it gets above it. It's going to do something like this. They're going to come back like this. Maybe sit somewhere here like so. And then it's going to do this. This is just what exactly like our Aussie CAD did. And then they're going to make its move. And it will do that over time. So instead of us taking it right now, we're going to let it work the significant level. And when we start to see it's coming back and it's now moving with some momentum, as it spent some time around the 140.46, then we're ready to go. It'll give us some swing lows where we can place our stop loss and we can ride this thing out. So the number to stay in your mind right now, as far as the pound yen is concerned, is the 140.46. This is our decision-making point. We want to see it spend some time, and then we're going to buy that and take it up to the next level. All right, so we can say this. It has to be some discretion, guys, because you can see it's got momentum. It's still pushing. So these are pending orders. It's going to be a buy stop. Entry is going to, let's make this. So let's make this 140.60. Give it some room. Okay. So this is our buy entry. It's going to be here. All right, 140.60 is going to be buy area. Now, remember what I said, the number is 140.46. That's our significant level. So if I'm going to take a buy above 140.60, then I want my stop to be below 140.60. And the stop, you need to see this. Okay, so if it goes up like so, and it comes back, let's say it comes back down like this. Remember, we're not going to buy the early one. We're going to wait for the late move. So it gives us a swing like so. Then I'm going to put my stop below that swing low. That's below the 140.46. Okay, this is why we have to remember the number. Make a note of the significant level, 140.46. Okay, so it's most likely make this kind of curve around this area. That's going to be a technical point on the chart, and which means that our stop loss will be below here. What that means is, guys, it's like this kind of thing. When you see it comes back, it makes that low. So if we was taking this buy, we would have said our stop loss is going to be below 139.43. The swing low below there, which is here. Okay, and that gives us this safe move. We're going to look for the same sort of thing here. We'll wait for the swing low below the 140.46, and when it goes, we take our buy and we place our stop below that swing low, exactly like you see this process over here. Okay, so for that reason, I'm going to say that my stop loss is going to be the last swing low, and I want that below 140.46. That's where I'm looking to place my stop loss. All right, I want my stop loss to be the swing low below the 140.46. Now, the next significant level, this is the next point of resistance once the price gets above the 140.60 area. Okay, so I'm going to let my target be below this 142.23 area. Okay, so I'm going to look like, for example, the 142 whole number here. I don't need to take the last dime out of the market. I'm just going to say right here that my target is going to be 142 whole number. All right. Okay, so after these trades, it doesn't matter what it does over here. Okay, I'm not going to set the pending order until after 11 p.m. tonight. Okay, only after 11 p.m. tonight will I be looking to set up the order. I'm not going to set it before. So if at 9:30 or 10 o'clock it breaks above this entry, I'm not going to get involved. I don't want to know. I want to see where it's going to come back and where it is around 11 o'clock. If it's come back by 11 o'clock, then when it goes back above again after 11, then I'll get into the trade. I'm not going to do anything before 11 p.m. All right. So if you want to take a screenshot of that setup, be my guest. That's our first trade, the pound yen. Okay. I'm going to give that one a tick. And then we'll have a quick look at something else. We're going to take a look at the chart for gold. We're going to go to the daily time frame. All right. Now we're going to have a look at the chart for gold. We always look for the opportunities on the higher time frames. The only quick way to put the significant levels on, Marcel, is to import them if you already have them on another MT4 platform. All right, so this is our chart for gold. Yeah, Paul, I just spotted that too. Paul just said there's a double bar here on gold. And double bar, guys, is a reversal sign. Yes, Wendy, well done. You're spotting this. Okay, it's a reversal sign for gold. Okay, just get rid of the previous gold short trade we had on there. Okay, and what's nice is that we have our significant level there too, which can steer us into the trade. Now look at this. This was the support for gold, the 1204.96 area. All right, you see it was support for gold. Okay, and because it was support, this is what we've been discussing. If it was support, it means there was buying, keeping the price, the gold price above this level. When it came back down again to there, to the penny, they bought it again, which means the stops will be there. So what happened when gold broke that level? The stops were triggered and we had a lovely move down here, okay, which it has found some support again at gold, okay. So we can do something like this, okay, because this is a nice turning point for gold, right? And you can see what it's done. It's moved back up here and now we have a sign of a reversal. This means that we can expect gold to come back down again. Now why don't we do a quick correlation with gold, because if this is going to come down and we're going to get this reversal from this double bar setup, then that means the dollar index should now look like it's turning around to go back up again. If we are right on our analysis, the dollar index should look like it's about to go back up again. It will inversely correlate with gold. This gives us another sign that this gold short might be a good trade to take. So let's take a quick look at the dollar index. Again, we're just going to stay on the daily time frame. Now, look at the dollar index right now. We had this big sell-off in the dollar index yesterday. It's recovered more than half of its gains, okay? More than half of its gains, almost like a double bar in itself, or at least it is now what we call a bullish piercing line. This bar is above the halfway, and if we get a close above the halfway, it is also a sign of a reversal. Another also important point is that it's closed above our significant level. Okay, not quite yet, but if it does close above our significant level, above this support here area, which is our significant level, and you can see it's been resistance, all right, then this is also a sign of a upward move in the dollar index. So it kind of matches, it fits our analysis. So if we go back to the gold chart, okay, we can plan a trade on gold below the 1200, and this is a big number in gold. This is a very big number in gold. Below the 1200, it's a psychological number too. So if we get a break below the 1200 in gold, we may very well see a decent move in gold. Okay. So let's see if we have some issues. So look at this area here, potential areas for targets. These areas over here, which kind of match. Goes down to 1123. That's a big move in gold. Okay, so we've kind of got this area here, which has given us a few touches, as you can see. Look over here. Look at this. So it's a recognized area in gold over here. And again, some consolidation built over there. All right, so we can definitely, you know, at least make this move and see what else happens. So let's go down to a smaller time frame and see what it looks like. All right, we have again all the signs of a failure, order accumulation, a breakdown from the local support. You can see the momentum increasing and just slowing down as it gets to this next line of support. Okay, this is the 1200 area, and you can see that this is a recognized price point. So this area here we're picking out as a potential for our target, and just, as you can see, again we've got some reference to the 1183 area. So the 1200 is definitely going to be a strong level of support, and we kind of want to see that broken down a bit. So I'm going to say something like 1197. Okay, we want those stop orders to start triggering. Okay, no, you don't ignore any of the digits, Rob. It's just the way that gold is quoted in the dollar value. And then what we're going to do is, so we can say, let's do this. So we can say this is going to be sell stop. And we can say 1197 hold. Okay, and the stop needs to be above that 1200 level, because keep in mind that I'm not expecting it to just come and break like this. I'm expecting it to come and sit here for a little while, then eventually break. Once that break has occurred, then that's a decision that's going to be made, and we can expect the momentum to increase once that 1200 no longer holds as support. Okay, once it no longer holds as support, the momentum will increase, the sell stops will be triggered, the short players will come in, and we will see this move come down nicely. Okay, so I'm going to say that if that's the case, then I want my stop loss is going to be the last swing high, and I want that to be above the 1200 level. Okay, that's where I want my stop loss to be. When the market shows me a swing high above this area here, I'll place my stop loss, and then I'm going to go and look for a target down here, because we saw that there is a level here at this 1183 area. So we'll say target, and I'm going to take it to the wire here, is going to be 11.83. 11.83. Let's say 82. Okay. So this is the setup for gold. All right, we're gonna have a short entry at 11.97. Stop loss is going to be the swing high above the 1200 area. Target's going to be 11.83, 8.82. Well, we'll take some profit. Now you can make a choice here if the dollar is really rallying. If you know, then we can maybe move a stop to the target area if we get a clean break and hold on to it, or we can just choose to get out. Maybe we can do like a half-half, cut half the position at target and let half go, for example, because you know, if the dollar's going to rally, then gold is going to come off significantly. So keep that in mind. All right, so if you want to take a quick screenshot of that chart. All right, and we are pretty much done with our two trades. So we've got one currency and one commodity. We've got the pound yen setup, and we have gold setup. Any questions on what we've discussed this evening, guys, before we wrap up? Cheers, Indy. If you got any further questions, you can type them in the group if you want, or you can send an email to us here, info@mdtradinguk.com. The correlation, Danny, is an inverse correlation between gold and the dollar. If the dollar goes stronger, gold weakens. If gold strengthens, the dollar weakens. Cheers, Wendy. Have a good week. All right, guys, this is recorded. All right, and I'll just convert the video. This recording will be made available for you guys for tomorrow. Other than that, happy trading for tomorrow. Just keep a cautious mind, and we'll update you through the groups about the speeches and help you decipher what's been meant by what's been said. So we've got your back there. Happy trading. Have a wonderful evening, all of you. I'm going to apologize again, as I do every week, for going over. Take care, and bye for now. Cheers, guys. Bye now.